Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Connon, and I have Dan Cook on the line. And Dan is Director of Business Development at Nadex. Dan, how you doing on this Monday morning?
I'm doing fantastic. How are you doing?
I'm doing good. So we had a crazy week in the markets last week. I was out for it, but how were things over at Nadex? Did you set any volume records?
Volume, as any time where we get a lot of volatility, and last week was, an amazing week really to watch. I mean, across the board, saw big movements in a lot of markets. And so, volume was really strong last week, and particularly considering, we're getting pretty close to the holidays, a lot of people taking vacation. I think with all the movement, everybody was holding off their travel plans for a little bit, staying very active the way it looked from our volume.
Okay, good to hear. And you got some new products coming in the pipeline or already out, and one of them is something we don't discuss a whole lot on the show, but certainly has caught a lot of people interest, and that's Bitcoin. You guys are working on a Bitcoin binary option market. Tell us about that.
Yeah, this was like most of our change. Actually, I'd say almost all of our changes driven by client demand. We go to a lot of trade shows, we talk to a lot of people every day, and the one question that kept recurring was, "Are you guys ever going to list a binary on Bitcoin?" And I didn't really know that much about the market until probably 3 or 4 months ago. So I'm really at the beginning part of my education as well, but really started researching it. And one of the difficult parts, people were really interested in trading Bitcoin, very difficult for the average individual trader to take part in. There's risk, whether you see the volatility that we saw last year. You have to learn a lot about how you can actually hold the physical Bitcoin. There's a lot that goes into it that really was prohibitive for people taking part in the markets. What they can do now is through Nadex actually trade on a fully collateralized contract, so their risk is always limited, just like all of our binaries. But it gives them an opportunity to speculate on the price movement in the Bitcoin market, but do it in US dollars. So they don't have to worry about holding the electronic currency. And as I've learned more about this, these electronic wallets that can be hacked, and then all of a sudden your Bitcoin is gone. A lot of different risks. Trading it through Nadex, they can still take part and be active in that market, but do it in probably a fashion that's a bit more sensible for them, if they had other concerns about the Bitcoin market.
Okay, so just tell us a little bit how you conduct your research. I mean, are you Googling? Are you calling the exchanges? Are you talking to the customers themselves that suggested it? There be a contract on it? Because you got to figure if a customer is saying that, hey, why don't you have a contract in this? You might think they might have a little bit of an edge and they want to exploit it. How exactly did you conduct your research?
Well, there as the market, I guess, is a bit more mature than what it was. We saw a ton of volatility last year. The research was very intensive, obviously, because you need to find, first of all, we're a CFTC regulated exchange, so we need to settle to a price feed that's really something, I guess, aggregate, because you don't want one movement in one dispersed market to throw off your whole contracts where it could be manipulated. And so we started working with the Terra exchange, which started listing a Bitcoin index. So similar to what we see in the Forex markets, where you have multiple banks producing a price feed, so you're taking quotes from all over the place. That's what Terra Exchange is offering, is an index through multiple feeds that have to pass pretty strenuous tests in order to do that, to avoid any type of manipulation. So the research in the background is, as with any contract we list, it's pretty daunting, because that's the one thing we want to make sure is that we keep a fair market. We're geared for the individual trader. We want to keep that market, a fair level playing field for everybody across the board.
And I probably got a bit ahead of myself here. I didn't really. When you come on, I always ask you to talk about the Nadex exchange, some of the advantages, who can participate, who can learn about it. So let's just go back a step and talk about the Nadex exchange, the characteristics of it, and how people can get involved in it.
Yeah, definitely. Well, Nadex is unique in that, as I mentioned, we are the only exchange really geared towards the individual trader. A lot of people, where we saw the opportunity, a lot of people want to trade futures. They want to trade oil. They want to trade things like gold or the E-mini S&P or currencies, but it can be very risky and it can take a lot of capital. I mean, if you look at the move in oil just last Wednesday, if somebody wanted to participate in oil and they're sitting there short around noon Eastern, it moved $3 in no time. That's $1,000 per point. Every dollar oil moves on a standard contract, that's $3,000. That's that's a lot of risk for the average person, particularly the individual, and they get caught up in the wash with all of the institutional type investors. The contracts are sized for institutions. So where Nadex comes in is we are a CFTC regulated exchange. Where we're different is people can now participate in oil in markets like oil and gold. They can do it typically for lower collateral requirements, rather than working on margin where they can lose a lot more than they have in their account. All of our contracts are what are called fully collateralized. And so basically what that means is instead of working in margin, whatever the risk is, let's say my risk is $40 on a contract, and that's not a multiplier, that's straight $40. I can trade them very small, so I can keep my risk very fine tuned. If it's $40 on one contract and I have the money, I can trade 10 contracts. But it limits that risk. And if I put up $40 to secure a trade, I can't ever lose more than that $40. It doesn't matter if World War III breaks out. So there's no margin calls. I never have to worry about calling my wife and saying, as a trader, hey, honey, the kids aren't going to college because I thought oil was going to 85 and now it's sitting at 55. So that's really where Nadex comes in. And as word has really spread about these contracts and more education has been available, it's really an exciting time because we're seeing a lot of people. We're continuing, it seems, to set record months of participation month after month after month.
Do you keep any statistics on account turnover? I think that's one thing that people would be interested in. Yeah, if people are starting with smaller accounts and they lose it's really no big deal. But it's all relative to how much money you have, how much you're willing to invest. Do you guys keep any statistics on that as far as the average account size, duration that accounts open, anything like that?
We do have internal stats. We are owned by a public company though, so if I release
Okay.
specific stats, it can impact the stock price. But I can say from my experience, what I see is the life of an account can be much longer. If I put, let's say, $2,000 in the currency market, actually I can't even trade one standard contract at 50 to 1 of the Euro USD at $2,000. So I'd have to have $2,500 just to trade one contract at $10 per point. That's a lot of risk. And the reason why I say I think the longevity of the clients here can be longer. Now, it's no guarantee, as we all know. If you come into a market with $1,000 and you put $1,000 on one trade and you lose it all and you're out, well, that's really kind of your own fault, right? No matter what the market is, no matter how great I think these contracts, it's still up to the trader to manage their risk. But I think what these tools do give the traders an opportunity to actually manage their risk. If they've got, $1,000, and we see account ranges, the minimum is $100. At $100, I'd say it's pretty difficult to manage your risk, even if you're taking $40 trades. That's way too much. But you can get in, you can test out the market, but somebody with $1,000 can actually trade sensibly, take some time. A great thing about these contracts is they're all limited risk, but there's no stops. One of the things that I saw when I was a Forex coach, trained a lot of traders working in the Forex market, was particularly for the newer traders. They come in and they hear manage your risk, so they smother the market with stops, get stopped out all the time. All of a sudden that stop starts moving farther and farther and farther away until it just disappears, and then they're out. With these, you don't have to put a stop in. Your risk is managed. It's similar to an option. It's like being a long call or a long put. The market can shoot against you, but you're basically buying time to be right. And so from a psychological as well as risk perspective, I think it really helps out, particularly the newer traders out there.
Excellent points all across the board there. You're talking about, risk management, staying power, the psychology of trading, and it's great points across the board. Well, besides these Bitcoin binary option contracts, you guys are getting into the shorter term realm here with 5 and 20-minute binary options on currencies as well as the stock indexes.
Yeah, on the stock index, and this was another thing that's really driven by our member demand. About 10 years ago, everybody was talking long dated options. We had the leaps and everything, and what we've seen across the board on all exchanges is it gets shorter and shorter, and it's been sort of a natural evolution. But when I look at particularly, let's say the 20-minute contract, if I'm trading, let's say oil or excuse me, let's say I'm trading around the FOMC announcement last week. one, I can do a limited risk. I wouldn't want to do that in the futures contract because I could get my face ripped off on a market move. But I can put a binary on. I can even straddle the market, and I don't have to pay a lot of time premium. If I'm trading the futures options, my expiration at the shortest isn't even until Friday. So why pay 2 extra days of time premium when I'm looking for a move either to speculate on or maybe to mitigate some of my risk? Maybe I've got positions in the underlying market and I just want that protection for 20 minutes. We've got 2 hour contracts as well, so they can roll in if nothing happened after the event. And so they really offer a lot of flexibility. And I think in the case of both the 5 minute and the 20 minute, and we talked early in the show about volatility and how, all exchanges across the board will tell you when you see volatility, at least to a certain point, you see a lot more trading activity. It gives opportunity. The unique thing about a binary is it creates opportunity even if the markets aren't moving. It has time decay. And so if you're looking at, let's say, a binary option on the very short term, and we've all been there as traders, we've all seen those markets where it's like watching paint dry. There is nothing even going on. The market's not ticking. There's no opportunity. These contracts at a very short-term nature, we call it actually exponential delta, where in the traditional option you have delta of -1 to +1. These can actually be exponential. So if I've got 20 minutes on a contract that's trading, let's say at 70, I can buy it at 70, which is a probability. The market's basically saying there's a 70% chance this will happen. I buy it at 70. My best case scenario is I can make 100. Now, just through the value of time, so let's say I did that 10 minutes into a 20-minute contract, that 70 within the next 10 minutes is either going to be 100 or it's going to be 0. 0 being my absolute worst case scenario, 100 being my best case if I buy at 70. And so even though the market doesn't move, that contract has to settle at 0 or 100. So even in those dead market days, you can still find opportunity to trade. You can basically trade on the assumption you think it's going to stay flat. Now, if it starts drifting away from you, if you bought at 70 and it starts going to 60 to 50, you need to stay flexible, you need to stay on your toes, and you need to pull that contract out once your risk parameters are hit, because why take it all the way down to 0 when you don't have to? So let's say 15 minutes in, it's at 40, pull the plug. You can get out of the contract anytime you want to up to expiration.
And conversely, if you're shorting at 70, then your risk is capped to 100, right?
Absolutely. If you're short at 70, your worst case scenario is 100. And particularly when we're looking at volatile, and I think around like one of my favorite use cases for these to share with people is around fundamental news announcements. I saw a lot of people try to trade these in the currency world and the futures world and just get crushed. But with a binary, you can take both sides of that trade. You can do something direction neutral. You could buy one at 10 and sell one at 90. Your total risk in that case is $20. $20 total. And if you get a big whipsaw in the market, there's no stops. You can actually get filled on both sides. So you can sell at 90, take a limit at 60, buy at 10, take a limit at 40. They have some really interesting characteristics. And so, yeah, you absolutely nailed it. You sell at 70, your worst case is 100. And if the market shoots against you, it doesn't matter. You're never out of that trade until expiration. I think, probably any trader listening has been in that spot where you get stopped out and all of a sudden the market, it's almost like it had eyes. It hits your stop and then flies in what would have been your direction, but you're out of the trade. With binaries and with our spread contracts, it doesn't happen because there's no stop. You're buying time to be right. You're taking out some of that market noise and giving the trade a chance to work in your favor. Not that it always does, though. You always have to manage your risk.
And what's like you have several different contracts listed. What do you have an average volume per contract? I mean, I know they keep turning over. Do you find some that are more popular, have a higher average volume, or pretty much the same across the board?
Our most popular contracts, and really is from a time perspective, the intradays, the 2 hours have been really popular. We're seeing a lot of traction on the 20 minutes. The 5 minutes were just released, so it's too early to tell. But so from a time perspective, it's the intraday. 2 hour and 20 minutes are very popular. From a market perspective, it's kind of the usual suspects. You see people gravitating towards the E-mini S&P, very popular in the underlying market as well as with Nadex. We see a lot of people in the currency markets. The Euro USD is a big one. The dollar yen, the yen's really been flying around. And then it kind of is day dependent. So whenever gold is making the headlines and, hitting lows or highs, we see a lot of people gravitating towards gold. Every Wednesday, oil is quite popular because there's an inventory report. And so it does go day by day, but there's always certain contracts which are more popular. Nasdaq is a big one on the day where like an Apple is releasing earnings. Because it has a tendency to move that, and so it is day by day, but there's always the usual suspects that most people would consider.
And Dan, what are the hours of your exchange?
We are open 23 hours a day, Sunday evening through Friday afternoon. So anybody familiar with the spot currency market, pretty similar to that. We just close 1 hour every day at 5 Eastern. Basically maintenance and different contract alignment and different things. So basically 23 hours a day. Look at each contract though, because not every contract trades 23 hours. A lot of it depends on the underlying market. So for instance, our grains trade during floor hours, not 23 hours.
Right, and always keep an eye on the expirations, especially if you're trading some of those shorter term contracts, and they get come up pretty quickly on you. So you guys have already made the step into the and really to the to the global markets and providing people a chance to participate. I mean, perhaps they have normal jobs or different occupations away from the market. They still have an opportunity to analyze and trade during the off hours. So that's very, very interesting. So, Dan, any final comments to people that are looking to get into trading at your exchange?
I encourage them. The first step, come to our website, open up a demo account. It's free. It's if you're a really slow typer, it takes about 30 seconds. If you're a fast typer, it takes about 20 seconds. So it's very easy to do. Get a demo account. Try it out. Try some strategies. See if it's interesting to you. Give it a fair shot and see if it's of interest. Not every market is right for every individual. Some markets aren't right for any individual. It's all up to people and their risk capital. But I think this gives people a really good entry opportunity, as well as for those advanced traders where they can come in and use some more advanced strategies in alignment with their underlying market trading.
One more just occurred to me. Are people mainly trading with other customers, or are the majority of the trades being made from an individual customer against a market maker?
Most of the trades, we have market makers, which are there to provide liquidity. So they show the size typically. We do have member to member match, and that's one of the unique things, and I'm glad you brought this up. So we do, in some cases, it could be Joe Smith in Iowa trading against Tom Smith in New York. Their trades could match. Um, every member is really their own market maker. You don't have to take what the market maker is offering. If you see a $5 wide bid offer spread, you can place your trade in the center of that. You can try to get it a little bit cheaper. So you can always work orders trying to get a more favorable price. But we do have market makers that still provide the lion's share of the liquidity on the exchange.
Okay, Dan Cook, Director of Business Development at Nadex, joining us here on Benzinga's Pre-Market Prep, brought to you by MarketFi Nadex as well. Dan, great conversation today. Have a good week, and we look forward to talking to you after the new year.
Thank you very much. Have a great holiday season. I can't believe we're into the new year already.
Okay, all right. Thanks, Dan.
Thanks, Joe.